Welcome to Venture in the South. These are the stories of innovation and success in the southern U.S. that make money, have fun, and do good.
Welcome back to Venture in the South, podcast about angel investing in the southeastern United States. On this week's episode, I'm joined with longtime Venture South member and entrepreneur and investor Dan Haight. He's going to tell us a little bit about his background and what brings him into the angel investing arena. Dan, welcome to the show.
Hey, Paul, how are you doing today?
I'm good. I'm looking forward to chatting with you about angel investing. Maybe before we get too far into that, you could just tell us a bit about your background and why you are where you are today.
Sure. So I am my mother's favorite middle son. I am one of 5 kids, was an Army brat, so moved all over the place as a kid, did some time in the service as a young adult. So I've moved a lot, but I now live in scenic Tryon, North Carolina. I've been here for a little over 10 years. I guess education, got a bachelor's degree from Clemson, history and economics or economics and history, depending upon which way you want to look at it, and an MBA from Kellogg. I am married to a lifelong learner, so she keeps dragging me to things, but those are the 2 degrees.
Okay, got it. How do you determine which way around those 2 things go?
My father would like to have it been economics and history, and then that's actually I got an economics major first, and then a history degree to follow on. It was always I kind of like history, so
okay,
although
got it.
I like numbers too. Yeah.
As a history major myself, I would definitely put the history first. So that's good. I'm glad we're on the same team there. Okay. So how did you get? Maybe just give us a quick synopsis of your working career. How did you get to the things you do today?
You bet. Yeah. So I had a ROTC scholarship in college, so I owed the Army some time afterwards. Spent a little less than 4 years on active duty. Continued on with about 17 total years of service in the military, but left active duty, fairly quickly. And everybody told me I should be a salesman growing up, so I was really the first person in my family to go be a civilian. And so I didn't have the first clue as to what I was doing, but I had a good friend who was going to be a salesperson at a company called Westvaco, which is no longer in existence, but it's a paper company. So I interviewed, as a junior military officer. I was actually in fairly decent demand. People liked that kind of discipline and training that we received. So Westvaco hired me, and I started a 20-year career in paper sales. So I was in paper sales and marketing for literally right at 20 years. And then, every now and then the universe doesn't hand you what you want, but it hands you what you need. It became apparent that my talents were not exactly I was just going through a merger, was on a leadership team at the division level. So I was the chief operating officer for a $2 billion manufacturing and sales division. And it became apparent that while my boss liked me, it didn't necessarily think that he needed me. So it was time to go do something different. And my wife said, you can leave corporate America as long as you promise me 2 things. 1, you don't go back. And 2, you take a year off. So, I wasn't good at taking time off, but it was a lot of fun to try and figure out what comes next. And that kind of led to the entrepreneurial side of my life and my career. Looked for companies that were good companies, but poorly managed. And that was right at 2008. So there were a number to pick from, and purchased a company in Greenville, turned it around, sold it, and then started a company with a partner that provides floor plan capital to independent auto dealers, and that's called Dealer Financial. And that's where I spend a lot of my time today.
Okay, got it. So back on your paper selling, I've got to ask which of the characters from Dunder Mifflin you are most similar to then?
Technically, I would be who is the manager. Technically, that would have been my role for most of my career. And I only hope I was as effective as he was at leading his team.
I can only imagine that you were. Okay, good. Okay, and those are interesting caveats about not being able to go back to corporate America and taking a year off. Those are 2 interesting requirements that your wife put on that. Have you wanted to go back into corporate America since leaving it, or has the entrepreneurial track been the one for you?
It's interesting. I think like anything else, starting something new is hard and scary, and you're not really sure what you're doing. Knowing that that's kind of what we wanted to do, as a family, I had some nice interviews with big corporations after I left, but I was pretty hell-bent on trying to figure it out. And again, I go back to in 2008, the economy. If I'd have known my leaving corporate America was going to crash the entire economy, I would have stayed at Abitibi Beauvoir. But it was the right time, and so it was. I discovered that the only thing crazier than big business was little business. As a budding, I'll call it, private equity, small E private equity guy trying to find something, there were a lot of opportunities. And the biggest challenge was actually helping the current owner entrepreneur figure out what they were going to do after they relinquished control. And so it was, there were a lot of opportunities, many of which fell by the wayside because the existing owner couldn't get around to selling. And so that was a key learning for me, having on the big company side, having participated in some mergers and acquisitions, my paradigm is I can walk in and value a company in about 5 minutes, right? And that's an understatement, but cash flows and all the kind of important stuff that go into that on a big company is pretty easy. Little company, I built it. I think I know what it's worth, even if the P&L and the balance sheet and the cash flows don't support it. That's a difficult thing to work through with somebody who spent their life building a company. So I had I'll call it a learning and hopefully now appreciation for those folks who had invested a lot of time and a lot of effort. And for whatever reason, they were at a point where they needed me more than they wanted.
Got it. It's interesting. You've been grappling with the issues that this new fad of entrepreneurship through acquisition, maybe fad's not really the right word, but this new trend of that, you were grappling with these issues for 15 years before that became fashionable.
Yeah, and again, I'm not sure I was trying to be, call it fashionable, but I knew that I had a small consortium of people who were, if presented with the right idea, would help support it. As it turns out, the first deal I did, I didn't need any help. It was a great company, but had truly been just driven into the ground. But there was still, we literally made an offer a year before we actually bought it that had more commas in it than the offer or than the purchase price I finally paid. And again, it was a very valuable lesson in acting rather than hoping, and it paid off.
Okay, got it. And so now you've been doing Dealer Financial for a decade, and you also joined Venture South in 2014, I think. So a little over a decade in angel investing as well. Are those related in any way, or are those two different pursuits from your perspective?
Well, I would say that I didn't join Venture South to support Dealer Financial, but Venture South has been an amazing support network, both from a conversation standpoint and fundraising. So while technically Dealer Financial isn't an official Venture South deal, we've got a great deal of our capital stack comes from Venture South members. So I think being a part of that community led to credibility as well as insight into how to structure an offer that people would be responsive to. So it was there was a symbiosis there, even if it wasn't an intention.
Okay, got it. So then why did you decide to become an angel investor?
Some would say going into Clemson wasn't this, but I've always tried to seek out the best training and the best opportunity. In the military, that was Ranger School and serving in some special operations unit, business school at Kellogg. And so I figured if I'm going to be an entrepreneur, I need to learn more and understand more. And I thought joining Venture South and seeing what was going on there was important to that training and education. I've seen a lot of angel investing efforts in the Southeast. Without a doubt, Venture South, well managed, get a lot of, they get opportunity to see, some good deals. So at that point, it was just UCAN. And, I got the opportunity to watch our UCAN managers, of which, you and Charlie and Matt grow the business just like we want our entrepreneurial founders to grow their business. So you guys are a great educator and a great example of what we want to see. So it was just a kind of a no-brainer.
Okay, great. Well, your check for saying nice things to us is in the mail. So thanks for doing that. It hasn't all been plain sailing along the way, though. So maybe before we get into that, maybe you can just give us a sense of the scope of your angel investing. So do you have one company or 50? And how do you put together your portfolio?
Sure. And I do most of, I'll throw out his name. I hope he doesn't mind. Steve Lanzel is kind of my partner in Dealer Financial, and he's the one that got us into that mess, as I like to say. And so he and I tend to invest together. So we have you're dividing the investment between two people right there. And we do it through an LLC. And so we have tended to make a lot of small investments up until this point. And I want to say, uh, somewhere in the close of 40 or 50 different investments, I think. And then we participated in one of the sidecars. We really like the sidecar thing, given where we are both in our investment life, in our life cycle. We're not getting any younger. I checked that out this morning, and yes, I got a day older. So we think we'll continue to participate. It may be more on the sidecar fund side than the individual side, but I also think when we see something we like, we make an investment. So we tend to make a lot of small investments versus one or two big ones.
Yeah, got it. It's a very sensible approach. How do you decide what you like when you see something you like?
I think we're industry agnostic, but there are, two things you're betting on. One is the horse and one is the jockey. Horse is the company and the jockey is the person leading that company or the team leading that company. And hopefully we like them both, but periodically we've seen, a horse that just makes a lot of sense. And sometimes you see a jockey that just has a track record of success. And I don't think this wrong, particularly now with the AI space. It's like people are saying words I understand, but I don't have a clue what they're saying. And that's I'm trying to understand AI because it's certainly going to be a part of our lives, but how it drives startups is still a bit of a mystery to me. But so we look at the jockey and the horse, and probably the jockey is more important than the horse as far as I'm.
Got it. So finding the team that you like and that you can envisage working with and seeing be successful. That makes sense.
That's right. Yeah.
Okay. So if there has been one, what's the biggest mistake or mistakes you've made so far putting that portfolio together?
I mean, I would say that every time you write a check, you know that you might as well set it on fire with respect to our entrepreneurial folks. But so we don't try and get too I'll call it invested in the investment, right? Many of them are just going to go away, and that's what angel investing is for. It's to give entrepreneurs a try, and if they succeed, then everybody wins. And if this effort isn't successful, oftentimes we see them come back for a different one or round two. But I would say that probably the biggest error, but we had a company we really liked that was in the mobile care business, and we expanded that by going into the franchise space, and that's a different business. And so that probably in hindsight would have been something that we should have said no to. But again, loved the company at the time and loved the horse, loved the jockey. I had a tremendous track record of success, so it seemed like a no-brainer at the time, and that has turned out to be a little more troublesome and a much higher commitment of capital than the traditional angel investment. So I'd say that one, but would I do it again? I probably would, not knowing then what I know now, but buying into a franchise, particularly early on in their franchising efforts, is a risky space. Maybe even more risky than just being an angel investor.
Yeah, got it. Yeah. Certainly when you start putting larger dollars to work in some particular things than your usual allocation, things can get out of whack somewhat quickly, right?
Yeah.
Do you focus on just investing once, or do you have a follow-on strategy for investments?
Yeah, so certainly we try and be in the first round. If there's an opportunity to invest after that to protect our pro rata share, we'll probably invest. We have not had a tendency to go in on second and third rounds, even if the company is being successful. But we will protect our pro rata share rights by making a follow-on investment if the company warrants it. Whether it's a good philosophy or not, I'm not entirely sure, but our attempts have been to be in the first round, pick it early, really early, and then let it ride.
Yeah, I had noticed that you had done fewer follow-on rounds, and I thought it was a deliberate strategy. I mean,
yeah,
there's a trade-off for investing later.
It's certainly something we've decided. Again, Steve and I will talk about it, but we have stuck with early rounds. It allows us to make more investments. If we have this much money to put in the pie, we can either stack it up against a excuse me, an existing investment, or spread the investment. And we've chosen to make more individual investments than layer in on one.
You also mostly, given a wide portfolio, aren't that actively involved in the companies, but there are a couple that you have taken a more active involvement in, though. So how did you decide to do that?
So I would say that the board I serve on, which is a Venture South portfolio company, and one of the longer in the tooth, Active Ed, that was an angel. And my first investment in Active Ed was done prior to it coming to Venture South. Knew the founder, liked the space. It's an educational software company. Really, really well-grounded product. And, so I had made, and my wife encouraged at the time, along with Steve and his wife, we made a couple of investments in that. And then, Venture South also made, brought it to Venture South, and Venture South invested. So I would say that I still believe in the product. It's a great product. It's turned, like anything else, executing the growth of that business has not been without its bumps, but the founder, Dr. Reed at Furman University, has done truly an exceptional job of pivoting when he needs to, and finding ways to continue to both grow the portfolio of the product that they have, and it's called Walkabouts, and it's for movement and education in the younger grades, but also pivoting when it comes to how does he sell this product to the marketplace. What has been most successful is we have government grants to get it into a wide range of schools versus calling on the individual schools or calling on the individual school districts has proven to be really successful for him.
Got it. So that one predated Venture South, but you had a personal relationship with the founder, so have been more actively involved in that over a while. We haven't had Dr. Reed on the show yet, but we should. My kids have used Walkabouts for many years, and so definitely also would advocate for it. So we'll try to get him on the show at some point too.
Super. Yeah. I mean, what I like about him is he's just a, heads down, no nonsense kind of guy. I'd love to be in one of his classes, because I'm betting if he brings the same approach he brings to Active Ed as he brings to his classroom, it's probably a pretty useful investment of educational time. So he's just a guy who works hard and tries to get it done.
Yeah, I mean that's a good ingredient in the startup for sure. Yeah. Do you have other sort of nonprofit boards and other things that you work on too that you'd like to give a quick shout out to?
Well, thank you for asking. And now Mothering Across Continents, which focuses on education and food programs in post-conflict environments. So South Sudan, Uganda, Rwanda. My wife is the executive director of that. They also have a peace education program that's done both internationally and in the United States. And, it's certainly her passion. And I am proud of what she's accomplished and what her team has accomplished, and pleased to be on the board of Mothering Across Continents. If you want to make a donation, you can find us at motheringacrosscontinents.org. So
okay,
feel free.
Great. We'll put a link to that in the show notes, and hopefully people can. So what would you say is your biggest win so far in the angel investing arena?
Well, in Target Pharma, again, I didn't really understand what the jockey was pitching, but it was a great jockey, and she was putting together I'm going to mess it up now, test sets for pharmaceutical companies to evaluate the efficacy of their products. She just executed really well, had a great idea, put it together. And I'm not sure how quickly we invested and spun it out, but I'm betting it was 12, 18 months, Paul. And she did a great job. So Target Pharma is my biggest win to date.
Okay. Well, yeah, that was an excellent outcome for the investors in that one in a short space of time. So that was a very well executed.
Now, I will say that, Bio 51? I mean, her follow-on was probably not as successful. And it just goes to show that just because somebody hits the ball out of the park once, again, it's hard to have a success. There are obviously very few Ubers out there, and even that type of win is hard to replicate. And so she came back. I'd invest in her again, more than likely, but it's not a guarantee.
Yeah, this is very interesting. So we talked about follow-on rounds as one way to double down on the company, but doubling down on the same investor the second time actually doesn't always work very well.
Right.
For a whole variety of reasons. The stereotype is second-time founders are better and do achieve success more often, but that's not necessarily the experience of the Venture South portfolio. All right, Dan, so for our last question, I know you have been on the board of UCAN for a while, so serving in a capacity to help the angel group be successful. Why did you do that, and what did you learn from the inside perspective there?
Yeah, so I would say again, going with the mantra of if you're going to do something, learn as much as you can, get as much training as you can, and being involved as you can. I was invited by
Kumani,
yeah, to join the board. He was the chairman at the time, and I did, and then became chairman of the board. It was what I've learned is our job as the board was to manage the manager because investors are making their own individual decisions. So our job was to oversee the managers. And I joined at a pretty interesting time because the group UCAN was, you guys were trying to expand it. You're starting Venture South. Is one going to be separate? So it was a really frankly interesting time from a corporate structure and an execution against that, and what sort of oversight we wanted to have and needed to have when it came to not only the portfolio but the manager. And it was I'm still on the Venture South board. I think I roll off this year, but it was very rewarding to participate in the kind of the oversight of the investment activities that I was undertaking personally. So I go back to it confirms that the Venture South group is certainly professionally managed, and well managed, and the three leaders have done a tremendous job of putting together a professional organization that attracts good, qualified investors. And in fact, I think your track record extends to the fact that there were other angel investing groups who have come to you and rolled their membership, rolled their organizations, not into Venture South, but has had the manager manage their organizations as well. So your track record of success is commendable.
Well, thank you.
And I was happy to be a part of it. Yeah.
We also try to use the philosophy that I think I read on your LinkedIn page that you arrange your investment groups trying to build value by executing the basics splendidly.
Yeah.
We try to do the same thing. A lot of what we do is not all that hard, but doing things consistently and showing up and being transparent and all those things, you've got to do those splendidly to stay around a long time. So we follow your philosophy on that.
You can't do the hard stuff right if you're not doing the easy stuff, well and consistently. And I go also, not every idea needs to be a business. And you guys have demonstrated that angel investing is a business and can be managed and can be executed well. And again, if you don't do the basics right, you're not going to do the complicated stuff.
Yeah, right. Your LinkedIn profile was also interesting. People described you, amongst other things, as being extremely punctual. So I was impressed that you did, in fact, show up early to this session, and you are, in fact, extremely punctual. So that was good.
Try.
They said other complimentary things as well. That wasn't the only quality that you've got, but that's an important one. Showing up is important.
Thank you, Paul. If you're on time, you're a minute late. So that probably goes back to the military as much as anything.
Well, yeah, I guess there is some, yeah.
Having a father that was also in the military. So my father, it was affectionately referred to as the Colonel by my friends. He didn't have a name. He was just the Colonel.
Okay, got it.
That was drummed into us consistently as a child.
That's an important habit. Well, got it. Well, Dan, we really appreciate your contributions to the Venture South network. You serve on a lot of diligence teams. You're on the board of a company. You give us good feedback. Well, feedback, good or bad, depending on how well we're doing. Constructive feedback on how well we're doing. So we really appreciate your involvement in the group, and thank you for taking the time to chat with us today.
It's my pleasure. It's a great organization, and I'm happy to chat about it. So thank you, Paul, for giving me the opportunity.
Thank you for listening. Visit us at ventureinthesouth.com for a complete list of previous and future shows.